Funding Circle is the UK's largest peer-to-peer lending platform, having lent out £7 billion to small and medium-sized businesses. Peer-to-peer lending allows ordinary people to lend directly to businesses that are borrowing the money.
Ultimately, this cuts out the greedy banks as middlemen, meaning that the investors, or lenders, get much more favourable interest rates. All of this is facilitated by the peer-to-peer lending platforms, who take a small fee as payment.
Funding Circle is the biggest peer-to-peer platform in the UK, having launched in 2010, and also operates in the US, Germany and the Netherlands. We initially reviewed the platform in 2018, but as with most things in finance, there have been a lot of changes both in the peer-to-peer industry and more specifically Funding Circle. So this updated video is well overdue.
If you invest in the platform now, they are offering projected annualised returns of between 4.5% and 6.5%, depending on which lending option you choose. As with all peer-to-peer lending, this is an investment, so your money is at risk.
If you have any questions that we don't cover in this video, then feel free to leave us a comment, as we do our best to answer as many comments as possible.
In this video, we're going to review Funding Circle, how it works, the recent changes, what we do and we don't like, and our own experiences. Let's check it out. Welcome to Money Unshackled, the investing and finance channel that sets you and your finances free. This is Andy, I'm Ben, and if you like what we say, hit the like button and click subscribe.
Right now, Funding Circle are giving new customers who invest £1,000 or more a £50 Amazon voucher, in addition to a great interest rate. You'll only get this welcome bonus when using our special link, which is listed on the Money Unshackled offers page. We'll put this link in the description below, so be sure to check that out. Let's get into the video. How does Funding Circle work? Essentially, all you have to do is deposit money with Funding Circle and tell them what risk level of loans you want to invest in. From that point, your money is automatically lent out to a variety of carefully vetted businesses. What we love is that everything is done for you and that your risk is spread thinly across a number of different businesses.
It goes without saying that each business must go through Funding Circle's rigorous credit assessment process, but please understand that this is an investment and your money is at risk. No peer-to-peer lending platform is covered by the Financial Services Compensation Scheme, as your savings in a bank account would be.
Although the minimum investment is £1,000, Funding Circle do suggest that you invest at least £2,000, and we fully support this suggestion. This is because an investment of at least £2,000 will ensure that your money is lent to at least 200 businesses, and that no more than 0.5% of your money is lent to any one business. This is the sort of great diversification that we talk about so much on this channel.
What happens during an economic downturn? We're extremely positive and optimistic about peer-to-peer lending in general, and particularly large established platforms like Funding Circle. So much so that we think that every investor should have at least some exposure to this new asset class. We see them almost like bonds, but with better interest rates.
During an economic downturn, projected returns according to Funding Circle will be worse but still positive, as seen here. We think that it is always wise to take a long-term view and assess performance over a number of years anyway. This way, any poor years should in theory be more than offset by a number of good years.
Recent changes. Up until recently, Funding Circle was experiencing a problem in the amount of time it was taking to sell loans on the secondary market. If we remember correctly, at its worst it was taking up to 4 months to sell, which understandably got some bad press.
A great thing about Funding Circle is that investors don't have to wait for the term of the loan to mature to get their money back. They can choose to sell their loans on the secondary market, but as many investors found out, this was not always as fast as would have been liked due to another lender being needed to take the loan off you. In normal conditions, this was fine, but what was probably panic selling caused a number of lenders to try and sell their loans, causing a huge backlog.
Funding Circle have since stepped in to remedy the situation by making some changes. They have now introduced a fee of 1.25%, which the new lender now receives from the existing lender. And rather than the selling queue being based on a first come, first served basis, the new tool will instead cycle through all investors wanting to sell.
Although this fee seems a little unfair for existing lenders, it should provide some stability to the platform. We expect the transfer fee to act as a deterrent to discourage existing lenders from selling, and also as an incentive for those that are lending. Don't forget that you can avoid this fee entirely by allowing the loans to mature at their full term.
We are also keen on the change to the selling queue, as it means that everyone trying to sell will at least get some of their money back, whereas before people were having to wait way too long. Previously, an annoying feature of the queue meant that if you wanted to sell more than what you had initially requested, you would have to cancel your request to sell and rejoin the back of the queue. You don't anymore, and this is a welcome change from Funding Circle.
Investment options. You have the option of investing through a normal account, which they refer to as classic, and you can also invest through an ISA, meaning you can earn interest tax-free. We think it's best to use an ISA where possible because you don't need that much money invested at these high interest rates before you have to start paying tax. FYI, basic rate taxpayers have a personal savings allowance of £1,000, meaning that you can earn up to £1,000 in interest before you have to start paying tax. If you are using multiple peer-to-peer platforms, which we encourage, and taking advantage of multiple sign-up bonuses, then you may have no choice but to use the classic account.
Next, you'll want to choose your projected returns, and you get two simple options to choose from. You either choose the balanced option, which lends to all risk bands, and the projected return is 4.5% to 6.5%. Or you go with the conservative option, offering projected interest of 4.3% to 4.7%. Here, you can see Andy has gone with the higher interest offered by the balanced option.
What we like. To keep it brief, we very much like the interest rate, the ability to sell early using the secondary market, great information on the loans such as business information or regular comments on loan status, the size of Funding Circle is the biggest and is well funded, the simplicity of the entire process.
What we don't like, no provision fund. Some other platforms keep a provision fund to reduce your risk to the specific loans you're invested in. Funding Circle offer a higher return to compensate. More info on returns. We'd like to see the return percentage by year and not just over the length of time you've been invested.
Our experience. Overall, we have both had excellent returns from Funding Circle, with my ISA account earning 7.3% since 2018 and my classic account earning 6.5% since 2016.
I did experience some issues selling loans mid-2019, but we expect the changes that we just mentioned to fix this going forwards.
Question of the day. What do you think of Funding Circle and how have your experiences been? Let us know in the comments section. Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.